Good morning, traders. Today's the 15th of November 2023. Just want to do a really quick update on what's going on in the market. So we have the US CPI overnight, and it came in way below the consensus. So the drop was 3.7% to 3.2%. The market was pricing in for a drop to 3.3% on the headline inflation. Now, this points out that the inflation is kind of cooling off in the US. And this is not just the only thing that drives the market overnight. The core inflation also dropped to 4% from 4.1%. This is below the consensus of 4.1%, which is a stable core inflation. And the rate of change per month drops from 0.4% last month to 0%. And the core inflation rate of change also drops from 0.3% to 0.2%. So we basically have more of a one-way directional move. There's no such thing as a mixed data coming out from the US CPI overnight. Overall, it shows a cooling inflation, and I think the market is basically saying, look, what the FOMC has done in the past 2 months to pause interest rate hike was the right decision. And I don't think they are going to be hiking more rates in 2023. And that would be the case for the FOMC. I don't think that's going to be a December hike at this point in time. And then for next year, we're probably going to be looking at a move towards April. If inflation continues to drop off, they might do an interest rate cut beginning in April 2024. Now, let's take a look at the run in the EURUSD. So what we're looking at here is basically from this candle at 1.07. It pushes all the way up to 1.0887. That is a whopping 186 pips on the EURUSD. I'll go through the intraday chart first, and we'll take a look at it in comparison to the daily time frame. If we take a look at the daily time frame, this one here has taken the pair beyond the third weekly pivot. So I'm going to close out the pivot, and I'm going to hide the Ichimoku for a little bit, but we know this one has transitioned above the Ichimoku cloud. So I just want to clarify a few things. One thing that I'm still concerned with the EURUSD is considering the current range, we are basically at that order block around 1.0850 to 1.09. And this is the only consideration that I have. For now, the ascending channel is pretty much gone at this point in time because we kind of exceeded the ascending channel by double the amount, so we are going to get rid of that, but we are still going to keep that support area around 1.0650, 1.07. Now, because this is only run up for 1 day, we actually don't see any discernible pullbacks on the EURUSD, at least not on the hourly time frame. What we need to figure out is if price is unable to break above 1.09, because we know that from the daily time frame, there's going to be a little bit of a resistance building up at around 1.09. So if price is unable to break 1.09, what could EURUSD do intraday wise? Now, the ideal way to look at this is we want the EURUSD to kind of pull back a little bit intraday wise. So we do have a little bit of a fair value gap, right? So I'm just going to mark it here. That's going to be between 1.08 to 1.0825. Now, this is going to be the area where I think there's a lot more buyers coming into the market. So for now, we have a few floors. We've got 1.08, we've got 1.0750 on the EURUSD. At the current price level, it doesn't make sense to continue going long the EURUSD at this point in time because it's so close to that 1.09 level. Again, the ideal scenario is for us to see a little bit of a pullback, maybe towards the fair value gap. Okay, and then that's probably where we're going to be looking at a potential bounce on the EURUSD. But again, this level is going to be critical because if price doesn't bounce off the fair value gap, it would actually come back in below that range, below 1.08, and it could potentially return to 1.0750. Now, in comparison, let's take a look at it from the Fibonacci's. What can the Fibonacci show us? We need to take it from the low on Monday, and let's just measure it here. I'm going to swap this. Okay, so we're looking at about 38.2%, which is a normal retracement, or to the maximum of 61.8%. That's kind of the range that we are anticipating the EURUSD could pull back to. Now, can we expect that pullback to be 100% guarantee that we're going to be looking at a pullback? Obviously not. But at the current price level, it's going to be tough. It's going to be a tough pill for a lot of traders to say, yeah, let's continue buying Euro USD at such a high level, because a lot of traders are going to be looking at this and say, look, this is very close to 1.09. The market has run up to about 200 pips, and it's due for a little bit of a retracement. So the best case scenario intraday wise, if you're tackling the Euro USD, should it close below this low here, or actually this one here, should it close below that low, it's actually a little bit more ideal to attempt to go short and go for that correction there. So you have a few choices. Obviously, you can trade the correction, and if you want it to be a little bit more safer, wait for that bounce from the gap there, which is about 1.08. So we've got two scenarios. One, we could trade it short, and the other one is we could actually attempt to go long and aim for that 1.09. Obviously, the risk reward ratio is going to be a lot better if you wait for the bounce, and it is going to be a lot safer because we're going in the same direction as the movement from the CPI number overnight. Now, this is not quite done yet. For those trading sterling, you need to be a little bit careful with sterling. That's going to be the inflation number that's going to be released from the UK. Now, the expectation is a huge drop from 6.7% to 4.8%. Some consensus shows 4.7%, but we're looking at about 2% drop on the UK inflation. That is a huge ask, so be very careful with trading the sterling today. But tonight, we still have the US PPI numbers. Obviously, the US PPI numbers could create that retracement on the Euro USD if it comes in a bit higher than what the market is market's consensus is. But if it drops below consensus or as per consensus, then we are likely going to be looking at further continuation to the upside for the Euro USD. We should anticipate the US dollar to continue to weaken. Right now, we're looking at a little bit of a risk on sentiment in the market. We have equity rallying up. We have risk assets, risk currencies like the sterling and the Aussies. They're also rallying up at this point in time. Not saying that the rally shouldn't continue, but it's not ideal to just jump in on the trade right now because the run up overnight it's pretty crazy, and we don't actually have a significant pullback, a reasonable pullback for traders to attempt to jump into the market. So now for the Euro USD, again, our focus is going to be at 1.08, 1.0825. So with that, good luck with your trades, and I'll see you soon.